Hey everybody, Steve Antonioni here, or Antonioni, if you'd like to say it like in Italian. I know there's a bunch of new people here who are subscribed, so welcome to the channel. That's how you say my last name. As you can see, I am wearing black today, and that's because we are mourning the loss of our gains. Things are not good, but they could get really bad. Very bad. We haven't had a real crash in the market in a long time, and I think a lot of people have forgotten how bad a real crash can actually be. March 2020 was not a bad crash, okay? Yes, we did drop in value massively. We dropped about 35, 40-ish%, but that took place over the span of, it looks like about 34 days here. 34 days for that market crash to happen, and then we were already on our way back up. That is an absolute joke of a market crash. If you want to see how bad, long, and just absolutely dreadful a bad market crash can be, well, let's look at 2008. You can see here that it took something like, sorry, it's covering there, but you can see it took, over 500 days to find a bottom. Over 500 days of grinding downwards, just dropping. That means almost 1.5 years of falling. What about 2001? Well, 2001 looks like it took about 931 days from the peak to find a bottom. Several years of just grinding lower. And don't even get me started on crypto, like that can absolutely nuke down 85-ish% you can see here over the course of over a year. Look guys, as much maxis in crypto would have you believe, Bitcoin is not a currency, it's not a hedge against inflation, and it's also not a store of value. What it is an amazing performing, speculative, risk-adjusted asset. And I know a bunch of people just got triggered and they're like, oh, I'm steaming mad that you said that. But like, I'm sorry, this is just reality. Over time, I believe Bitcoin can probably achieve those things, but it ain't that today. And if you treat it like it is, you're gonna get smoked. And by the way, like I hold Bitcoin, but I don't expect it to behave like anything other than a high risk on asset for the foreseeable future. Anyway, we are currently down about 8-ish% on the S&P, and it's only been about 2 weeks or so, just to put that into perspective, so this party could be just getting started. Now, I'm not saying this to scare you, I'm not trying to spread fear, I'm not saying that this is going to go very badly, and heck, for all we know, this video could mark the absolute bottom, like who knows. But I think a lot of people have become new investors in either 2020 or 2021, and all they know is that stonks only go up. But I hate to break it to you, as I'm sure you're now well aware, they don't only just go up. Crazy, I know. By the way, if you're feeling personally called out by that, I'm just poking a little bit of fun. Honestly, I think you need a good sense of humor to be able to survive a market downturn. All right, so I'm thinking we'll do two things today. First, I'll try and explain to you my thoughts on why I think all of this is happening right now. And then second, I will tell you what I'm planning on doing besides trying to see if I can get a job at McDonald's. So why is this happening? Well, friends, we've been talking about this since for almost, 3 months ago, as many of you will know who have been watching the channel. But for those of you who haven't been following, well, let's sum this up like we were speaking to a 5-year-old. After March 2020, the money printer started going I can't roll my R's. That was better. And interest rates went down. This caused everyone to flow into risk assets. So we can call this a risk on period. People have been incentivized here to take on risk. They've been incentivized to invest their money and seek returns. But a byproduct of this is asset inflation. And we also saw inflation in other parts of the economy because of things like supply bottlenecks. But now, the money printer is not going brrrr. It's slowly shutting down over time, actually. And interest rates are going to start ticking up. But why? Why are they shutting down the party? Well, because of inflation. Inflation is like cops at a high school house party, all right? They're like, shut it down, turn off the music, turn off the money printers, Miss Pelosi, no more huge gains for you. So what happens now? Well, the opposite of what happened before. People are now incentivized to take risk off and then flow their money into more defensive assets. So we can call this a risk off period. Now on top of this, we're going to make a nice little concoction here. So add to the mix a dash of wildly speculative crypto markets, a sprinkle of soaring home prices, a pinch of rising inequality, and a drop of geopolitical conflict, and you've got yourself an apocalyptic soup right there. And before you know it, we're going to be listening to Three Dog on Galaxy News Radio, which honestly isn't the worst thing in the world because he plays an absolute killer soundtrack. I personally would not be mad. But before you sell everything, buy a bunker, and learn wilderness survival skills, I think there's actually an argument to be made here that we have already seen most of the damage here, and that's because a lot of the risk-on assets have already lost a ton of their value. The NASDAQ is down over 10% at the time of this recording, and many of the assets within it have lost somewhere around 50% of their value. And of course, Bitcoin and Ethereum have fallen similar amounts as well. So many of the riskier areas of the market have seen a ton of punishment, whereas a lot more defensive assets or assets with more tangible fundamentals have actually done quite well. So perhaps we've seen most of the damage. But there is also the case that this party is just getting started. And that's because, well, I mean, the S&P technically isn't even in correction territory yet. We're not even down 10% yet. The last time the Fed tried to raise rates like they are today started about here in January 2016-ish, and then they ticked them up for a while up until about this period in 2019. And let's check and see what happened to the market. Well, we can see that the market actually fell by about 20 or so percent because of this, in part at least. So today we've only fallen 8%, and comparing that to something like the 20% drop we experienced before when something like this happened, well, it looks like there is potentially some ways to go. And if we're seeing this much pain at an 8% drop in the S&P, well, then you can kind of guess what a further drop would mean. And there is, of course, a third possibility. We don't trend back up, we don't trend down, but we more or less trend sideways in a kind of choppy motion. Now, I, of course, have no idea what's going to happen. I can't tell you that. But I personally have a plan that I am satisfied with in any of these three different scenarios. So here is my plan. Now, I am half joking, but I'm also half serious. Here's the way I look at things, okay? This is my own personal financial situation. This is not advice for you. You have to do what you think is best for you. But I have shown you guys exactly how I have constructed my portfolio. And everything in that portfolio, I am super comfortable with. I'm super comfortable with my allocations to each thing, and I am super comfortable with my investment thesis behind each one. So that makes me super comfortable to see it drop massively in value. I talked about this. Remember that skateboarding clip I showed you? If we crash, I'm going to absolutely eat it like Jaw vs. the Lion 25 stair set. Not good. And the reason I'm so comfortable is because of two things. The first is that my position size in my portfolio is directly correlated to my conviction in an investment. If I have a very high conviction, well, it makes up a larger part of my portfolio. If I have a low conviction, it makes up a lower part of my portfolio. And number two, I have a long-term time horizon. I am a net buyer of stocks, crypto, and perhaps even real estate in the future over the next 10 years minimum at least. So I don't care what the price to sell something is today. I am not a seller. I am not a seller for a very long period of time. I am a buyer. I care about what the price is to buy something today. So if we do have a legitimate multi-month or even multi-year downward trend in the prices of assets, then logically, This is amazing for me. You know how so many people are like, oh man, if only I could have started investing in the 2008 crash, like, oh, that would have been so great for me. Well, you might actually get the chance to try that out for yourself, but we'll see who actually has the cojones to do it. Of course, emotionally, it absolutely sucks to see prices just continuously going down, prices of things you own, your portfolio continuously going down. It's basically the equivalent of being put in an armbar and then trying not to tap out. But unfortunately, many people will tap out at low prices. But logically, not emotionally, because I am a net buyer for at least the next 10 years, something like a market downturn would be an absolutely enormous wealth generation opportunity for somebody like me. But it won't seem like that in the short term. It won't seem like that for days, weeks, months, maybe even a year or two. It'll actually seem really bad. It'll seem gut-wrenching because I'll be buying things that just keep dropping. Every time I buy something, I'll be losing money on my buys for a very long period of time potentially. This type of thing can really test your resolve as an investor. But I've personally done my homework. I've built my theses. I've made my appropriate allocations, and I accepted this as a possibility before I even put money into assets. So like Jon Snow in his battle against Ramsay, I'm sticking it through, even in the most bleak of scenarios until reinforcements arrive. And hey, if everything actually literally collapses, then money won't matter too much, will it? So either way, can't lose. That was a joke. A half joke once again. Most jokes contain a kernel of truth though. But if those reinforcements do arrive, well then, as they say, bull markets make you money, but bear markets make you rich. So these are my thoughts on things right now. Hope you found this helpful. Hopefully you didn't get too steaming mad about certain things. Thank you so much for watching and hope you have a great weekend.